All right, everybody, it's your Uncle Ed again. And you know me, I'm always coming. I'm bringing information, not just any information. We're bringing it on to make sure that you are financially in the know. And number two, that you are financially as healthy as possible because it's not what you make, it's what you keep. And then what you do with what you keep is super, super important. So, on that note, hey, look, we all need health insurance, right? Every one of us, we all need it. Unfortunately, population, we're all getting older, right? And even though I take care of myself, every once in a while something breaks and we got to fix it. And so, on that vein, I have invited a super, super knowledgeable. And what I mean by super knowledgeable, I mean he's forgotten more than we'll ever know, kind of thing, when it comes to healthcare. This
I just
man
can't
is
remember.
all in. He's one of those kind of people, right? All in, go big or go home. So, here is Steve Snyder. Thank you so much, Steve, for gracing us. And honestly, on a serious note, I mean, healthcare.
Thank you,
I
Ed.
mean,
It's a delight to be here with
well,
you. And
thanks, man. I appreciate it
it
because
really,
this
it
is such
really,
a hot topic. I mean, honestly,
yeah.
it's we're spending so much money on healthcare. And by the way, the number one reason for bankruptcy is health problems in this country. Number two is
That
job loss.
is what's number two?
Job loss,
Oh yeah,
losing
job
your
loss.
job.
Well,
But number one is
medical
health problems.
bills. Medical bills is the still the largest reason for personal bankruptcy because
Yep.
people can't pay the medical bills. You
Yeah.
know what happens in a hospital bill? Somebody could be in the hospital for 2 days and 3 nights, and the bill's 30,000, 40,000, 60,000, whatever it is.
Yeah, it's totally
At the
true.
end of the bill, when the bill comes, even if they're insured, there's going to be a due because health insurance policies don't pay for everything. There's always an annual out of pocket,
It's
and
true.
let's just say it's $9,000, which it can be. Okay,
Hey,
well,
and a lot of this stuff, Steve, as you know, I mean, look, for the average person, including me, man, it's hard to decipher all this language and the
I know.
this and that and second pay, and then this is what I'm responsible for, but there's a cap on that, and then my premium, and then we
Yeah,
have, to pay a copay and this pay and that pay and everything pay. It's just honestly, man, it's
well,
like
I I,
I
I,
should have
sim-
gotten a PhD.
I simplify it for everybody, but when they can't pay it, they go bankrupt trying to find something to
Yeah,
refinance to pay it. And the reason they don't have the money, most of the people in this country can't write a check for $1,000 to pay for that or something. But also, one of the main reasons is they have too many Escalades in the driveway they can't afford.
mm,
It's
yeah,
the
and
way we
that's a whole
live.
different topic, but you're right. So
Yeah.
let's talk about the state of health insurance in the United States right now. Where are we at?
The Affordable Care Act was legislated by the Obama administration in 2010. And three administrations before that, from both parties, couldn't get it done.
Hmm.
And Obama did it with an executive order. We know what those are today because we know what they are. The Obamacare is simply called the Affordable Care Act.
Correct.
It was
Right.
created to provide help with the premium so more people could have health insurance. The Affordable Care Act is operated by each state, but it's funded by the government. I'm sorry, my messenger's going off in my ear.
No
It's
problem.
basically money from the government being sent to an insurance company to reduce or eliminate premium.
Hmm.
In our state, we have a vehicle called Cover California. There are
Right.
37 other states that have these types of organizations. It's primarily to manage the federal money to be made eligible to be sent to the insurance company. It's as simple as that.
So is that under the ACA?
Yeah.
Okay, got
Oh
it.
yeah.
Okay.
Yeah. No, I'm ACA qualified and certified in 14 states.
Okay,
And
perfect.
as I get a client who says their mother's in this state, I go, oh, give me 3 days, I can get the license, and that's how I've grown that business. I
Sure.
didn't want to
It's
go after it, but
similar to my mortgage business. Yeah, I get it. Yeah,
exactly,
yeah.
exactly. And the current administration, when it was in office before the previous administration, tried to eliminate it about 62 times in Congress to no avail. As we went into this last open enrollment beginning of November, they changed the ACA rules to extend the ability to receive money to higher incomes to force more people into it, to try to get as many people into it as possible, to make it more difficult for now the current administration to go after it. And with everything that they've gone after, they haven't gone after health insurance yet.
Okay. Do
But
you
there's so
foresee
many,
that happening?
I don't know. I mean,
Yeah,
I'll talk like a television.
I hear you.
I you know,
No, nobody has. Yeah, it's like
but
asking me where
you know what?
mortgage rate's going to be exactly in a
I
year.
would expect
No idea.
I would expect them to do it.
Yeah. Okay.
Yeah.
Okay. So on that note, do you think there is light at the end of the tunnel without that being an incoming train, of course, that premiums are going to get more expensive or less expensive?
I just have to say they're going to, well, the premium that we pay or the premiums that are grossed out before people get help.
Grossed out before help. What we actually, well, let me rephrase it. What we pay on a monthly basis.
Uh,
And do you see that as a double digit, single digit kind of up? Yeah, we don't know.
The Cover California rates for under 65 have gone up 2, 3, 4% every year since I've been doing this the last
Okay.
couple of
It's
years.
almost like a COLA, right? A cost of living adjustment kind of thing.
Uh,
Yeah, that's about right, 4 to
yeah,
5%.
Medicare's been going up that way too.
Yeah.
So it's the same thing on supplemental insurance, and Medicare Advantage is going up too.
Got it. Now, with so many plans out there, what do you recommend the person watching this to do so that they at least can say, look, before I rest my head on my pillow every night, I could say that I did everything that I could to model match the right program for my needs and not overpay? What can they do? Or what should they be doing?
But they should call somebody that knows how to find out their eligibility based on factors. Factors are how many people are being insured in the house, what's the total family income, what's the zip code they live in, and that creates an eligibility. Either if they're not here in California, I would put them through the state that they're living in. But if they're here in Cover California, I use a Cover California tool called Shop and Compare. It's a broker tool that we use, and I can tell them how much it's going to cost them.
It's an industry tool kind of thing. Okay. Yeah. Because I mean, I've heard stories of people just all of a sudden they were told by somebody, "Hey, man, you should go research it," and all of a sudden their premiums were almost nothing, but they were paying exorbitant amounts because they weren't really model matching the programs to their specific needs, right?
Yeah. Well, there's a formula. It's not a hard formula. I'll give you an example. Anything. The federal poverty level is used as a guideline, and a single person under 138% of the federal poverty level, which this year is 21,000. Let me get an accurate number. 21,597. If you make 21,598, you won't go to Medi-Cal, but below that you'll go to Medi-Cal. However, but between that 21,000 number and $45,000, you're going to get a substantial amount of money sent to the insurance company. Give you an example. If you're under 24,000, a Kaiser policy for two people might be $2.
Wow.
And the reason it's $2 is because the amount of money from the government going to Kaiser is larger than the premium, so it zeroes out. But then the carrier will charge you $1 per person when you enter, because they want the register to work, because they're looking for accounting so they could bill that code to the government.
Got it. Okay.
Yeah.
And then above the 24,557, what happens as far as choices? Is it tiered?
Yeah, there's actually 4 premium levels. Yeah,
there's 4 tiers. Okay.
Yeah, there's bronze, silver, gold, and platinum.
Based on income, total income per household.
Yeah.
Got it. Okay.
What happened is the silvers have always been divided up into 3 enhanced areas for lower incomes, from about that 22,000 to about 39,000. But last fall, the previous administration, before November, extended those moderate incomes out to as far as they could go. So I can take a single person making about 70,000. They're still going to get 100, maybe 200 a month uh, tax credit.
Hmm.
Okay.
Okay,
Uh,
that's good to know.
yeah, a family of four, anything under 44,367 goes to Medi-Cal, and
Okay.
children under 18 up until around 85,000 will go to Medi-Cal. But mom and dad at about 47,000 can go to a regular insurance policy.
Interesting. So it can be parsed that way. Okay.
Yeah.
Wow.
Yeah,
See, this is what I'm saying, folks.
there's a little chart here that we use
Right. Oh,
to
you're disappearing. But this is what I'm saying, folks. Look, I've said this forever. Yeah, you could try to fix your own car, but good luck trying to turn the key, right? You could be your own attorney, but good luck. Be your own doctor, do your own surgeries. Yeah, you can have at it, but most likely the consequences and the outcomes are going to be dire. Here's what I have to say. It's so important. Please listen to Uncle Ed very closely here. It is so important that you create a wheel or network of professionals that surround you for all your needs, whether it's a financial advisor, an insurance person, a health insurance person, a life insurance person, a great tax person, great mechanic, great contractor if you own a home, because in case something goes bad, don't try to, the DIY, in my opinion, is dead. To me, they're worth the ink on their business card, because here's the thing is that the Chinese have a proverb. It's you measure twice and cut once.
yeah,
You don't want to do it the opposite way, try to fix it, and then you're spending even more money trying to fix it, right?
yeah.
Afterwards, after you've cut all the wrong wires, if you
They
will.
they
And
have
so
another one called future success depends on previous preparation.
absolutely, and it's true.
Yeah.
And this is why I bring on these guests and why I brought on Steve today. It behooves you seriously, whether you know really well what you think you know about your health insurance plan or not, it behooves you to contact Steve like now. Book an appointment with him because he's honest and he's extremely knowledgeable. Let's model match this to your specific needs, because it's like everything else. Everybody's got a different shoe size. It's not a one size fits all. There's so many idiosyncrasies to these policies. You don't try or pretend to be an expert, and Chat GPT is just going to confuse you even more. Let's go to Steve
Oh,
GPT Snyder and talk to him. His phone number is right there. Is there an email address that they can also use, Steve, to get a hold of you?
yeah, it'd be my first initial last name, S. Snyder at healthmarkets.com. And if you have a minute, I'd speak about Medicare.
Yeah, let's talk about that, and then
Yeah,
we'll part ways.
the most important person that I look for to help is the 64-year-old.
Mm,
Because the moment you turn 64, the marketing machine comes at you from every source of media there is for you to sign up for this and sign up for that. And if you don't have A and F and C and G and B
that's true.
and D, man, it's like, whoa.
Hmm.
So I pride myself in educating Ed, the 64-year-old, and I simplify Medicare into two options. That's it. And now
Very
there's
good.
details per option, but I give them the actual breakdown of exactly what to
Yeah,
expect. And again, that's going to be based on income. Higher incomes,
yeah, especially
lower
income.
incomes
Yeah,
are going to go one way, and higher incomes will go another way.
absolutely. And by the way, folks, did you know this here? In case you go to Jeopardy, we have over 10,000 people turning 65 every single day.
Yeah,
So if you're getting close to 64, I mean, go talk to him. Let's simplify things. Look, you have other things to worry about. Last thing you want is to be ill prepared for this. And then all of a sudden you get a medical bill that is so huge,
oh,
or you're just paying way too much in premiums right now for what you
yeah,
need. Don't give the money away to other people. Be your own bank. That's the key. How do you keep more of what you make? And especially now with $8 to $10 for a dozen eggs. I mean, we all need to be watching our money even closer than you ever have your
yeah.
entire life. Now's the time. Steve, as always, you're a gentleman and a scholar. Thank you so much for showing up. And please, folks, seriously, I do these things because I want to give you value and I want to educate as many people as possible. And all things finance, and things that affect you because look, it doesn't grow on trees and nobody's knocking on your door with $100,000. Here,
No.
have this. I don't know you from anybody, but I thought you can use 100 grand. Nobody's doing that. And until that happens, make sure that you surround yourself with the right people because the right people will move needles and also mountains.
And
Steve,
Ed is the right people to help you finance your home.
I would be honored. But this is about health insurance, and we want to make
Thank
sure
you.
that you take care of it because I know you're making those premiums every single day. But yeah, of course, if you're tired of your landlord and you want to fire him or her, give me a call. Let's get you in the house. Thanks, Steve. I really
Hey,
appreciate
thank
you,
you.
buddy.
You bet.
You will.
Good to see you again.